The economy is imploding. For the past 7 years, the world has been living through a really ugly experiment, hyper-Keynesian economics. Stimulus, low interest rates, quantitative easing, and plenty of fraud to go around from government statistics, to the lack of honest accounting with the suspension of marking current assets to current prices. For years, investors were bullish on China, a country that was hailed as a great success from central planning, a state-run economy with some capitalism, perhaps a model others could look to in the future. As China fueled commodity consumption for the past 15 years, now the world has to take a serious look at what they have accomplished. Ghost cities, $50 billion bridges to nowhere, were all part of an economy and job market built on air. Now, as reality sets in for China's future growth, a new reality needs to set in for investors. The fact that we have no idea what will be China's new normal. Because even once they hit bottom, they've already built cities for the next 20 years. Think of the harm this has done to the construction worker looking to enter the workforce in 5 years. What's the point? The cities of 2025 were built in 2010. For commodity investors, this is a true disaster, which is why we suggest anyone buying a resource stock today should also seriously consider having a position in a China bear fund or ETF like CHAD. Here in the US, oil companies since 2009 have borrowed at artificially low interest rates in order to produce higher cost oil from fracking, which has now helped flood the world in oil. Only now we have lower oil prices, higher interest rates for the oil frackers, and an almost certain default as these companies can't pay the debt back, especially with lower oil prices that for the most part are unprofitable for unconventional drillers. So what does an oil executive do in this scenario? Well, so far they've tried to make up losing money on oil with volume, which obviously has only made the problem much worse. All around the world, stock markets are crashing. Brazil is in depression, China and Europe are in recession, and Canada and the US look to be entering an official recession in 2016. FutureMoneyTrends.com has just put together an action plan for 2016. Included in this report is what to do now with your money on asset allocation, cash, gold, and how to best hedge as the entire global economy implodes. The central planners have truly made the reset of 2008 10 times worse, and unfortunately there is no silver bullet, but we believe we have put your best options forward. Download our free report at futuremoneytrends.com/protect. Our 2016 guide includes the top 7 trends we see for the next year and what actions to take. In just the first week of January, as markets melted down, our members are up considerably as we suggested to short China last month and go long a very specific high-quality gold company, which rose 26% while major indexes melted down. Go to futuremoneytrends.com/protect and receive our 2016 guide with actions to take, with our weekly Wealth Digest updates every Wednesday. FutureMoneyTrends.com/protect. Personal finance for the new economy.